XRP holders' lawyer shares key facts amid summary judgment delay. Access the link in the description to stay updated on all cryptocurrency and Bitcoin news, as well as real-time charts. The XRP community appears to be growing tired of the much-anticipated summary judgment, SJ, in the lawsuit between American blockchain payments firm Ripple Labs Inc. and the United States Securities and Exchange Commission, SEC. With the waiting period already in its 7th month, XRP holders' lawyer John Deaton has shared some key facts to ponder amid the delay. Deaton's consolatory facts. According to John Deaton, Ripple Labs is not the only firm waiting on a decision from Judge Annalisa Torres, a revelation he shared to help prevent people from jumping to conclusions. Deaton cited the Thor Equities case as another pending case before Judge Torres, whose reply briefs were filed when Ripple Labs and the SEC made their own filings. With impatience in the community growing, Deaton revealed that in the New York District Carpenters Fund case, Judge Torres' summary judgment ruling took over 8 months from the reply briefs. The Ripple v. SEC lawsuit has lingered for more than 2 years, and the community is eager to put this episode behind them and chart a new growth course for the firm, XRP, and its associated innovations. As a vocal advocate and stakeholder with interest in the case, John Deaton reassured the community that Judge Torres may be taking her time because she is aware of the magnitude of her decision. Potential end in sight? Both John Deaton and Ripple Labs CEO Brad Garlinghouse have predicted earlier that the case should have been resolved by now. With general expectations now heightened, experts are refraining from offering any additional predictions as to when the case might end. However, a series of scenarios have been painted depending on whom the summary judgment will favor at the end of the day. A likely redress at the Supreme Court is generally not ruled out, a scenario that will effectively add about 5 years before the case is completely settled. Wave's price endures rollercoaster ride, a 45% daily increase followed by 25% drop. The Wave's price increased sharply on July 10, reaching its June high value of $2.92. But the upward movement could not be sustained, and the price fell by 25% afterward. The weekly and daily time frame analysis both give inconclusive results, which means that the trend's direction is not confirmed yet. The reaction to the current resistance area could be crucial in predicting the future trend. Has Waves begun a bullish trend reversal? The weekly chart shows that the Waves price has fallen under a descending resistance line since May 2022. Thus, the line has been in place for 413 days so far. Until now, Waves made several failed breakout attempts, red icons. It is currently in the process of making another one. While it increased considerably above it, it has yet to reach a close above this line. That would be required to confirm the bullish trend reversal. Waves USDT weekly chart. Source, TradingView. Moreover, the weekly RSI also gives an undetermined reading. When evaluating market conditions, traders use the RSI as a momentum indicator to determine if a market is overbought or oversold, and to decide whether to accumulate or sell an asset. If the RSI reading is above 50 and the trend is upward, bulls still have an advantage, but if the reading is below 50, the opposite is true. The indicator is increasing but is below 50, a sign of a still undetermined trend. Read more. 9 best crypto demo accounts for trading Waves price surges but fails to clear resistance. The daily time frame analysis shows that the Waves price has increased since falling to a yearly low of $1.21 on June 10. The upward movement accelerated on June 24, causing a breakout from a descending resistance line. At the time of the breakout, the line had been in place for 125 days. The price increased sharply after the breakout. The high point of the day was 87% above the daily low. However, Waves has fallen since. It made another attempt at moving upwards on July 10, but that only led to the creation of a very long upper wick, red icon, considered a sign of selling pressure. Read more. Best crypto sign-up bonuses in 2023. Moreover, the price created a double top, considered a bearish trend reversal pattern. Waves trades below the 0.618 Fib retracement resistance level at $2.55. According to the Fibonacci retracement levels theory, following a significant price change in one direction, the price is expected to partially return to a previous price level before continuing in the same direction. The 0.618 level is crucial in determining whether the increase is corrective. The fact that the wick highs were made above this level and the price fell below it afterward supports the possibility that the trend is bearish. Despite the seemingly bearish price action, the daily RSI is still bullish. The RSI is increasing and is above 50, both signs of a bullish trend. Waves USDT daily chart. Source, TradingView. Therefore, the Waves price prediction will likely be determined by whether the price closes above $2.66, or continues trading below it. If it closes above, an increase to the yearly high of $3.30 will be expected. However, if it fails to do so, waves could fall to $1.60. Dogecoin, Doge, price downtrend set to persist, what to expect? Dogecoin, Doge, experienced a substantial surge on the price chart towards the end of June. However, despite this notable increase, it failed to ward off the sellers who swiftly entered the market. Can Dogecoin regain its momentum and rise again, or will it succumb to the mounting pressure from the bearish sentiment? Bitcoin, BTC, also experienced a downturn in the previous week, and this negative trend had a noticeable impact on the sentiment surrounding Dogecoin. Unfortunately, the figures did not provide a strong basis for a potential recovery in Doge. Instead, it indicated a looming decline towards the price range of $0.053 and $0.048. Doge bearish indicators emerge. The current Doge price on CoinGecko stands at $0.0652, experiencing a modest 0.7% rally within the past 24 hours. However, it is important to note that a decline of 5.8% has been recorded over the course of the past 7 days. This price movement has prompted a closer examination of the market conditions, revealing some bearish signals and underlying trends. Based on a Doge price report, it appears that bears are preparing to exert downward pressure on prices once again. The Relative Strength Index, RSI, has slipped below the neutral 50 level, indicating a shift in momentum towards the bearish side, suggesting that selling pressure may increase in the near future. Additionally, the on-balance volume, OBV, has been unable to surpass a resistance level since May, reflecting a lack of interest from buyers. This suggests that market participants may be hesitant to make significant purchases, contributing to the downward pressure on Doge prices. Although some buyers noticed the recent short-term rally and made purchases as prices slowly edged higher, it is worth noting that this rally pales in comparison to the significant surge the meme coin experienced in early April, when Dogecoin reached the $0.1 level. This discrepancy, referring to the difference between the current rally and previous ones, implies that the present market upswing may be lacking an equivalent degree of enthusiasm and support from buyers. This observation raises questions about the sustainability and strength of the crypto outlook for Doge. The bearish signals observed, such as the RSI dropping below the neutral 50 level and the lack of conviction from buyers indicated by the OBV, suggest a challenging road ahead for Doge. These factors may contribute to increased selling pressure and further price declines. Considering the current market conditions, it is important to approach the outlook for Doge with caution. The short-term rally, although relatively subdued compared to past performances, could still offer opportunities for traders looking for quick gains. However, it is vital to remain vigilant and closely monitor the market dynamics. MicroStrategy stock surges 7% as Berenberg highlights Bitcoin halving's impact. Hamburg-based Berenberg Capital Markets recently highlighted the upcoming Bitcoin halving event as a potential trigger for the bullish case of MicroStrategy, a United States-based software firm, in a recent research note. The research note emphasized that MicroStrategy, with a bullish price target of $430, primarily derives its value from its substantial holdings of over 150,000 BTC, and Berenberg expects the historical trend of Bitcoin rallying after each halving to repeat. Halving events and Bitcoin's market impact. Halving events are significant occurrences in the Bitcoin network that happen approximately every 4 years. During these events, the rate of new coin issuance is reduced by 50%. Resulting in a slower influx of new Bitcoins into the market. The upcoming fourth Bitcoin halving, scheduled for April 26, 2024, is expected to follow this pattern. Berenberg's recent research note highlighted the historical trend observed in the previous 3 halvings and suggested that a pre-halving rally could potentially commence in about 4 months. If this rally follows a similar trajectory to previous halvings, it could persist until approximately October 2025, according to the research note. Berenberg noted, if the historical pattern established by the first 3 Bitcoin halvings continues to play out with the 4th halving, then the pre-halving rally would begin about 4 months from now. If a rally were to occur after the 4th halving, and if it were as long-lived as the rallies that occurred after the past couple of halvings, then it would continue until around October 2025. Correlation between Bitcoin and MicroStrategy's stock. According to the research note, there is a strong correlation between MicroStrategy's stock price and the price of Bitcoin, estimated to be around 0.90. If the 4th Bitcoin halving triggers a significant rally in the price of the cryptocurrency, it is likely that MicroStrategy's stock will follow suit. This forecast is due to the positive outlook for Bitcoin's post-halving performance, contributing to the anticipation of a potential rally in MicroStrategy's stock price. Following the release of Berenberg's research note, MicroStrategy's stock, with the ticker symbol MSTR, has already witnessed a notable surge of 7% in the past day. The stock, which was trading below its current price range in the previous month, is now valued at $407. The market's positive response reflects the optimism surrounding the potential impact of the upcoming Bitcoin halving event on MicroStrategy's performance. Furthermore, it is worth noting that the concept of halving has since been associated with significant market movements in the past, and investors closely monitor these events for potential opportunities. The reduction in new coin issuance, combined with market demand, has historically contributed to price appreciation in Bitcoin. As such, the anticipation of the upcoming halving has sparked interest and speculation among market participants. Berenberg's analysis adds to the narrative that the halving event could have a bullish impact on the price of Bitcoin, and, consequently, on companies like MicroStrategy, which holds a substantial amount of Bitcoin on its balance sheet. Featured image from Blockchain Reporter, chart from TradingView. 600 million Shiba Inu burned as Shibarium continues to score major new goals. As the new week kicked off, the amount of SHIB burned daily has been rising extensively as 500,000 plus of these meme coins have been sent to dead-end wallets. In the meantime, the price of the second largest dog-themed cryptocurrency SHIB has gained a marginal 1%, after a 4% decline since Sunday. 601 million SHIB sent to Inferno wallets according to data shared by the Shiba wallet tracker. The past 24 hours were notable for the SHIB army as, during this period, the circulating supply of SHIB shrank by a total of 601,643,004 Shiba Inu. The largest lump sent to dead wallets carried roughly 20 million Shiba Inu each, Shiba shared in the table of registered burn transactions. The above-mentioned comprised SHIB lump exceeds the one burned on Monday by approximately 100 million SHIB. 601 million versus 559 million meme coins. As reported by U.Today earlier, over the past few days, Shibarium testnet has hit a significant new utility milestone. Within the last week, the total transaction count has surged by roughly 1.5 million, reaching a 28,645,428 all-time high. The number of wallet addresses connected to the PuppyNet test chain remains at 17,061,463. The launch of the Shibarium mainnet is expected to occur after August 16. This is when the ETH Toronto conference in Canada ends. At the conference, Satoshi Kusama will be a virtual speaker. All SHIB-branded projects will be publicized and detailed discussion of the Shibarium launch are likely to take place, according to a recent blog post published by Kusama on Medium. Still, top SHIB team member Lucy posted yesterday a reminder to the SHIB army on Twitter, saying that there is no exact date for the Shibarium launch. However, she said that the developer team is close to the release of the Layer 2 protocol. SHIB price action after losing roughly 4% since Sunday. The Shiba Inu K9 token has been making attempts to recover. On Monday, it gained back 2.27%, but then the price growth was erased. Earlier today, SHIB managed to rise by 1.52%, but since then it has gone down a little. At the time of this writing, the meme coin is changing hands at $0.000000755 on the Binance exchange. Access the link in the description to stay updated on all cryptocurrency and Bitcoin news, as well as real-time charts.